So talking about psychology that you mentioned, is it the main principle that is the difference between the novice and the professional trader? What are the main difference?
Well, when you think about your question, technically, as in statistically, if there's a 50-50 chance that we could win or lose, then doesn't that mean by default that 50% of traders should be winning traders and 50% of traders should be losing traders? But the fact of the matter is that the vast majority, in the 90%, lose money over time in trading. So what you need to accept is that the odds are overwhelmingly against you, not from the market's point of view, but from a personal point of view. It's not the market that's the problem. You're the problem. And the problem that you have is that you think the wrong way. You need to think differently in order to become a good trader. You have to be one person when you are out and about with. You need to think differently in order to become a good trader. You have to be one person when you are out and about with family and friends, but you have to have a different mindset when you are in the market. And that mindset means that you have to accept that you will always have to buy higher than the previous person, or you always have to sell lower than the previous person. So you cannot be afraid of buying something that has already moved up significantly, or you shouldn't be afraid of selling something that has already moved down significantly. And that's where the vast majority of people go wrong. When the market has fallen a lot, they won't be looking to sell short. They'll be looking to buy because they think it's cheap. But the market doesn't operate with these principles of cheap or expensive. The market just has the prevailing price. But psychologically, that's very difficult for us to accept, because we're so brainwashed that we go to the supermarket and we see Pepsi. But psychologically, that's very difficult for us to accept, because we're so brainwashed that we go to the supermarket and we see Pepsi-Cola costs X, but Coca-Cola is half price to Pepsi, so we all gravitate towards Coca-Cola because it's cheaper. But cheap in the market is a market that is going down. We don't want to buy that. We want to sell it short. So the whole balance of being one person in real life and being another person in the market, that's what makes trading so incredibly difficult.